It's an interesting day in the markets as we see Tesla ripping upwards on the back of some dog shit earnings. The crypto market taking a bit of a hit today. We'll be discussing that and much more on Money Never Sleeps. Welcome back, everybody. Before we get going, do us a favor, hit that like button, subscribe to our channel. Nothing that we say is financial advice, so please do your own research before making any buys or sells. If I seem distracted, Kevin, it's because there is a squirrel and a bird fighting outside of my window, and it is quite riveting. But I'll try to stay focused on the markets. GM, Mr. House, good to see that crypto is taking a fat shit. Randy, good morning to you as well. Kevin, how are you doing on this fine Wednesday?
I'm doing great, Mr. House. Thank you for the haircut. I asked to get scalped.
Shipped off to the military.
Yeah, I think we're all going to be getting shipped off to the military fairly soon. Jokes, hopefully not. I don't want any more war. But I do think that we are doing pretty good today. I'm looking at the markets. I don't really care if the market's green for these next 2 weeks or not, but we're seeing a lot of things that just don't make sense, and then a lot of things that absolutely do make sense. So I'm very happy with where we're standing, wherever I'm sitting right now, sitting in the positions, and
sitting,
also just
standing, shitting, whatever.
Wishing, hoping. It seems like we're in a pretty good spot right now looking at the market. A lot of news coming out that I love to see. Some about Cathie Wood. We'll show it in a second. But yeah, I feel good, man. I think it's fun when the markets are doing things that you don't want, because even if there are signs of things that are like, maybe this is a bit of a trap. And I think honestly, we're in a trap right now.
It's a trap. All right, let's start today's show with what we have on the thumbnail, what the title of the show is, and that's Tesla. Tesla reported earnings after hours yesterday, after our show. Everything missed. It was all a miss. It was a bunch of dog shit. Earnings per share, 45 cents adjusted versus 51 cents expected. Revenue missed by just under $1 billion. 9% drop in first quarter revenue. Biggest decline since 2012. Not ideal. But you know what? Fuck it. Let's send the stock up 11% today. Who gives a shit? Nothing makes sense. Why is it up that much today? Well, Elon said that they're going to start production on a more affordable electric car soon. I don't know in what world, like, this is, to me, we get accused of being overly bearish and looking for reasons to be bearish. Right now, the market is looking for a reason to be bullish on Tesla, and this ain't it. They're having to lay off a lot of people at their plants in both Austin and in California. I believe just under 2,700 at the Austin plant. So they're cutting back on production. Now, that's going to be good for the stock price because that's lower labor costs. But there's also decreased demand, and we can see it in the in the used car market as well. Like, not just for Tesla, but Ford as well. I mean, Ford, Jesus Christ, they're electrics. No one wants that shit. But with Tesla, we're seeing them coming way, way down as well. I don't know realistically how much cheaper they can make a Tesla right now. What are they talking, like a $20,000 Tesla? And who the fuck wants that? People, like, most people, especially if you have like the charging station and shit, like, most people don't want an electric vehicle right now. Like, they just don't. There's too many headaches that come with them. And so for the market to rally on what to me looks like a desperation move from Elon of no one's buying. The Cybertrucks have been getting recalled. That's been a disaster. No one's buying these higher end Teslas, or at least not as many people as previously expected. Let's go after the people who don't have as much money. Oh, but wait, they're terribly in debt. The rates on getting a loan for one of these Teslas are going to be through the fucking roof. Like, I guess if you want to be bullish on Tesla right now in the short term, I don't know. I guess that is your thesis. To me, that's a load of shit.
I was actually bullish on Tesla yesterday before the show. I was looking at calls. I'm like, this thing's going to pump. I don't care what the earnings are. I knew it was going to pump, and it did. And I think it's more of a technical trade right now. This is kind of this thing where let's sucker everyone back into it. But I completely agree, man. There's nothing bullish about Tesla right now. Maybe where are we right now? 160. Maybe at about $90, I'll be bullish. $90 from where we currently are, I'll be bullish on Tesla because I do think Tesla is going to be doing a lot more especially with, I mean, their vehicles aren't for consumers right now. Could you imagine how many Teslas would be on the road, and like it would just be kind of pulling down their brands, their image. Kind of know that they're the nice car, it's a luxury car, a lot of people want it, and it's also for most people tends to be a second car for wealthy individuals, right? Just to see that's what Tesla is. I think they're charging in a lot of their technology moving forward for the automotive industry is going to be huge, but right now there's no reason to be bullish on this long term, as in like, oh, I'm just going to buy this dip because we're seeing how bad they're doing, and we haven't even seen anything really in the market break yet. So the fact that unemployment is still, I mean, it's rising. We know that there's layoffs. We're almost at 100,000 for the month of April already. But the problem is we're probably going to continue to see that, and people who had a lot of money on hand are just not going to put that money back into the markets. They're not going to buy these luxury items. We've said this for the longest period of time, and eventually it's just going to be to a point where they're going to have to lay off more people, or they're going to have to cut the supply in which they're producing these vehicles, and that's not bullish one bit. Now, if you want to take it as a bet when we're at that $64 to $100 range level, maybe it's the time to be bullish. I don't think it's bullish at all. Nothing about Tesla right here is bullish. I think if anything, this is the one that's given the game away about the Mag 7 and how weak tech really is and how weak the consumer is, because, hey man, 2021, everyone wanted a fucking Tesla. They were on the street. They were everywhere. Everyone had money for that. Now, I don't know. It's just we're seeing how many problems they're having, even outside of just the customer. I mean, it's kind of falling apart to the point where Elon probably has to refocus some of his energy back at Tesla and away from Twitter, hopefully. But is what it is.
Yeah, I mean, Twitter's been a mess, anyways. But I'm reading through the deck and some other write ups on the earnings, and it's just now they're focusing more on AI, and they're an AI company. They're not as much.
Everyone says that.
I mean, Jesus, when you're trying to cover up bad earnings, you just mention AI and
it
Wall
worked.
Street. Wall Street jizzes in collective pants. That's just kind of what we're seeing right now. So we're talking. They're talking about their robo taxi based service, and I mean, their self driving stuff has been not good. Like, it's just been so many accidents with it too. Like, they're just right now. It feels like they are just throwing out any Hail Mary that could possibly alleviate the bleed of the stock price that we've seen over the last 6 months.
They're too reliant on the consumer. They have a product that's way too reliant on the consumer, and that's just problematic for them. That's their biggest issue right now. There's not enough money out there, and we're seeing it with consumer spending. We saw it in the beige book. People aren't buying. I do want to pull up one thing that's related to Tesla, because it's also in the thumbnail of this episodes, and that has to do with Cathie Wood's ARK. Look at this. Investors have withdrawn $2.2 billion from ARK Invest funds this year, which is almost double total withdrawals from 2022 and 2023. Who said that fucking lady had no idea what she was talking about? A lot of people, but we were on that side too.
Any idiot can get a few calls right, present company included, but that doesn't mean that said person has any business managing a fund.
No. And what was she buying? Fucking Tesla, saying it was going to 2,000. I said there's going to make a quick pit stop at 64 and then maybe 2,000 in the next 2 decades if we don't have a lost decade already, underway. But looking at this, it just shows you people do not believe in her one bit. And it just shows that she is not printing money. I didn't even know this, but let me pull up ARK Invest. So I have a short on ARK or put that I bought a long time ago. I actually kind of forgot about it. But looking at it now, I'm like, hey, it's not that bad. It's not too far away from being in the money. So let's see what happens. And this is on the monthly. This was kind of this chart that I was looking at. Very hard to see Elliott wave theory. Let's go into the daily. Pull this up. And we can see that it's just been sideways range bound. But recently, it lost the 50 and the 200. And it's looking like it wants to bounce and retest the 200. I would be very interested to see if we are in a trap, 100%. Say we're in a trap. And you see some of those things that they're holding. Bitcoin pukes, say 20, 30%. You start to see Tesla drop again closer to that 130 range. I wouldn't be surprised if people just absolutely just slam the brakes, say, fuck this ETF, let me get out of it. And you see this thing just go limit down one morning. Maybe not to the level of MicroStrategy or Lehman Brothers or something like that, but you could see something very similar to like maybe the bottom of this channel. Maybe you go to like $29, $28. You're probably going to get a death cross if you find support in the 200. You find that as resistance. Cathie Wood's probably going to lose a lot more money in 2024 and possibly even in 2025. So something that's just really interesting to see because, hey, in the bull market in 2021, there was nothing she said that couldn't be true, right? Everything she said she was bullish on went up. Everything kind of went up in 2021. So now that we're starting to hit reality, I think it's kind of shown that some of these people don't necessarily know what they're talking about. At the same time, it just shows you that people are really quick to lose faith and pull their money out of things that maybe aren't as sure as they once thought they were.
All right. What else in the TradFi markets has caught your eye?
I'm glad you asked.
We got not really a whole lot on the data side. We'll have GDP numbers tomorrow for Q1, but why don't you go ahead and let me know what you're watching?
All right, so there's two things. We'll get into the first one being volatility, right? We're watching that VIX, and yesterday I said, a few days ago, I said if the VIX gets to the 15s, I'll be a buyer, and it got to 1575, and I actually put my money, yeah, that's the right thing, right? Money where my mouth is.
Mm-hmm.
Yes, that's the right thing. It's not numbers, so I don't know what I'm talking about half the time. But yeah, I did that, and I bought right at 1575. I actually bought a put on the SVIXY, but it went down to 1569, and then it bounced right back up. So I'm not saying that I caught the bottom of that, but it just shows you that there is a bit of a technical trade going on here with the VIX. Now, I'm very open to the fact that the VIX could crush a little bit more for the next week or so. So meaning we close red this week, and then next week we get another push down. If that's the case, I'll probably enter a little bit more with a put further out to see. And again, I'm shorting people that are shorting volatility. So that's pretty much what I'm doing because those trades tend to blow up pretty quickly if you start to see the VIX shoot up insane amounts real quick. That's the liquidity just evaporates. So I'm waiting to see what happens here. We're seeing that we're going to get a golden cross. We're getting close to it. We haven't bounced off the 50 to 200. But the reason I wanted to pull this up is because we're breaking out of this triangle, right? We broke back into it. And whenever we get to the closer to the the apex of this triangle, there's a good chance that we're going to either shoot up or shoot down. And we're very low. We're very low in the VIX right now. And what I wanted to pull this up is when we look at COVID 2020. I shouldn't have said that. Sometimes YouTube monitors that. But in 2020, you could see that you had this nice little rally, and then you had this pullback, and it was right around the time you were about to get a golden cross. But if we look at this on the weekly, right there. No, that's 2018. Here it is. So you had this really good push to the upside. You break out of it, and then you get the week back down, another week down, and then you start to break out of it. Very similar to what we're seeing right now, in my opinion, which is all the way over here. See if I can find it. Yeah, this break through it. You're breaking back into it. You might get another week down, test the bottom of this little trend line here, and then you're getting closer and closer to the point where you're probably going to break out. So I definitely believe that we are going to see volatility pick up either in May or in June, possibly even as late as July. But one of these 3 months, once we're out of this triangle, it seems like in history, every time we break out of this, it's violent to the upside. Here's April of 2020. Here is February 2018. And you can go back further. There's probably something around here too. There's a bunch of smaller ones, or like right here, this one to about 22 or so after trading at 9 in 2006. There's a bunch of scenarios, but more recently, this has become more of a technical trade, and it's something we're going to keep an eye on because if that's the case, there's something that's going to happen that's going to trigger that. Either it's going to be market makers are going to unwind that trade because they're the ones that are buying up the opposite side of that short volatility trade, and they're just going to say, you know what, screw it, we don't want to deal with this. And then when they do make that move, it's going to cause a lot of those shorts to cover. The other thing is that I think is probably the big black swan, and that could be the reason why we could see volatility pick up. The yen. The yen has been a bad boy lately. Look at this. It keeps going up, guys. 155.24. This is fucked up. This is absolutely insane. Like the last time we were this high, I mean, what I think is we're going for 160. That's my personal opinion. I think we're going to go for 160. That would put us in about May of 1990. That was during the middle of the collapse of the Nikkei. If that's the case, and what we're seeing right now is that the yen is going to continue to lose value, and there's only one scenario that's going to work. And they tried it a few weeks ago by selling off U.S. debt. They might have to sell off a lot more U.S. debt pretty soon. And what would that cause? that would cause the equity markets in the United States to have to switch over into the treasury market. So we're going to continue watching the yen, because this is the one. This is the one for me. I don't care what anyone says. This is the thing that's going to cause the equity markets in the U.S. to absolutely collapse, in my opinion. I think this is going to be the yen carry trade we talked about months ago. This seems like the most likely scenario if we're being conservative and saying that, if the financial system is going to have problems, it's going to be here. I think it's here. And when that happens, that's going to cause a lot of these equities to absolutely plummet. So that's why I think that we're seeing this continue to rise here, meaning it's weakening against the dollar, and the equities in the U.S. are kind of rallying here. Maybe it's a 2-week trade. It lines up with the VIX, but I do think that all three things are kind of converging at the same point, and it's going to cause some type of eruptive behavior in the markets that could cause a lot of volatility, could cause a lot of swings in equities, and maybe it cools off in the summer, but I don't know. Earnings are not looking pretty good either. So I could definitely see that if no one comes and buys this market when the blackout window ends in May, there's a good chance that we are definitely not going to see anyone hold your bags. You're going to see bags being dumped on whoever's still holding. So something to keep an eye on and keep in mind. I think that's the most important thing across all of the TradFi markets right now, because it is probably the thing that people are not paying attention to, and you could actually make a decent amount of money if you know how to play those trades. But again, I'm not going to tell you how to do that. There's just something there that's definitely going to happen. It's going to make a lot of people poor and a lot of people rich.
Oofta. Okay. So that's yen right there. That's our canary in the coal mine, as you would say, perhaps. Let's talk about crypto and how all of this can have a cascading effect on that. We're seeing Bitcoin take a bit of a hit today, down about 3.5%. Alts are moving lower as well. BTC dominance is down about 0.5%. Meanwhile, USDT dominance is recovering a little bit from its sell-off over the last few days. Where is your attention right now as I see we have Bitcoin pulled up?
Yeah, we can just look at Bitcoin. I honestly do believe that we're going to see a massive drop in May for Bitcoin, and that's only going off of what we've seen in May. Years prior, in the month of May, we've seen very bad price action, right? And that's not technical analysis, that's just history repeating itself. I want to see if Bitcoin is able to get up here. If we're not able to get to 74, 75K and, kind of hit the top of this trend line, then we're going lower. Lower from where we currently are, below this trend line down here at 60K. It's very possible that we just don't go up that high. And you can see that the stochastic RSI is actually kind of rolling over fairly fast. That means that the volumes are extremely low, which means that there's not a lot of price pressure pushing this up. I wouldn't be surprised that now that the halving's over, maybe some of the miners capitulate and they kind of sell off some of the holdings, like you and I and House kind of discussed. The other thing is we're not seeing anyone buy into this market, but there's a couple of things you kind of have to put your tinfoil hat on for that are going on. We talked about it with the banks in China and those sanctions. We talked about Venezuela and also those sanctions with oil. Now we kind of have to talk about what's happening in the U.S. with CZ. So they're only looking for 3 years against CZ, right? Why is that? Why CZ 3 years, and how much was SBF given or something like that?
25.
25, right?
Was it 25 or 25?
Something like that. It's way longer than 3 years. Let's put it that way. Was there anything said about Tether? That's my concern. And if it is, that's the black swan for Bitcoin and crypto. Either regulation for stable coins where they have to show proof of reserves. And if that's the case, then might find out that you might not be backed 1-to-1 in some of those cases. And I wouldn't be surprised if you see a lot of things sell off into USDC or in the cash very fast. I still think we have this move down here, which is about 20% move down to about 52K. That seems like the most likely where we're going to find the most level of support. You go back in history, 52K, you had a bit here in 2021, that's September. And you also got a good right here in February 2024. If that doesn't hold, then obviously you're coming down even lower and could be sub 50 fairly soon. I still believe that this move 100%, all Tether, all FDUSD, all those stable coins that are owned by usually two entities, push the price up and you got the volume up to the point where you were able to move this market. So that's something we're going to have to keep an eye on. Now, just looking at this on price action, you're making lower lows and lower highs, but at the same time, you're kind of rolling over every time you do that, right? So I'm thinking that, we're finding rejection right here on the midline of this thing. If you don't bounce off this, you don't close above the 50 moving average fairly soon, you're probably going to come down and test this. Third time's a charm. I don't know if it'll hold. And then once you're in between the 50 and the 200, you're going to be testing back and forth. So Kind of lines up with that 51, 52,000. That's where the 200 is currently sitting on the daily. It's also where a lot of liquidity is currently sitting. A lot of people who are max long are probably going to get liquidated down there, and it could come very fast. I mean, how much money would that be from where we currently are? About $14,000 or so, 13,000. I mean, I think it's very possible. We saw an $8,000 down day one time. 2 days, you could be right down there, and a lot of people get absolutely liquidated in this market. So, something to keep an eye on. And would that cause Bitcoin dominance to increase? I think so. I think there'd be a good chance you could see that push up as people kind of rotate out of alts in that case too. Because if Bitcoin goes down here, I'm pretty sure even with a 54.7% Bitcoin dominance, alts are not going to go unscathed at that point too. There's just nothing bullish right now for crypto that's going to continue to push the price. Like I said, we're out of the halving. It's over. There's more bearish catalysts, if anything, just because who's going to put the money in the market that's going to push it up? I don't know. One thing happens in the world and people are going to panic too. So there's a lot of things that you got to kind of be careful with.
I mean, we were celebrating institutional money coming in for the Bitcoin ETF. You just talked about the yen and how equities are going to have to flip over to treasuries. Same could be said for people who've, institutional money that's gone into Bitcoin, pulling out of that and going into equities, especially if the writing is on the wall that we have turbulence ahead. So possibility that this is a compounding effect, and I wouldn't be shocked by that. I wouldn't also be shocked if I was just dead ass wrong. So who the fuck knows anymore?
Well, let's end the show on the last thing today, which is the bank term funding program, because that'll give you a lot of confidence that everything in the system is just a-okay. Being a little sarcastic there, guys. But this thing, remember when they were supposed to pay it back? I do. So when we look at this thing, you're supposed to probably see this inverted to the point where, see how this shot up really fast? You probably would have wanted to see the same amounts that it shot up on the way down, but you're not. What we're seeing currently is about $54 billion that hasn't been repaid on time. So that's a lot of money. It's a lot of money. And I think it was 1,800 banks or so or institutions that borrowed from the BTFP. So it's not just one guy that's not paying. It seems like it's a lot of the smaller guys that aren't paying. We're also seeing the Fed's emergency repo increase to, I think, 8.56 billion or so. So that's the discount window. That's kind of the lender of last resort. They're already going to that. Quietly, no one's saying anything, but this is problematic. I mean, look how much was paid last week. Only 638 million. If I'm correct, it's about $14 billion that was owed last Thursday, and they didn't get it. So there is definitely a problem in the banking system. Rates staying higher for longer is problematic. The fact that the rates are staying higher for longer and they can't issue debt means the dollar is going to go up, which also puts more pressure on other currencies in the world. That makes the yen's problem even worse because the dollar is just staying strong. It's not moving. It's not budging. Nothing they can do is kind of working. So if they do have to unwind and sell off that debt, then, well, that's just going to make the U.S. equity sell off, and you're going to see huge inflows into Treasury. So I'm very much on the side that looking at this and looking at all the money moves in the, in the banking sector, that we're probably going to see something very, very similar to a flash crash. That's just my opinion. We saw a flash crash back in 2023 in March. Let me just pull up one last thing. I want to show you guys what the banks are kind of doing, which is kind of funny. This is why looking at the banks here, but the banks are kind of having their little rally right now too. Bank of America, I mean, I don't know why, but look how much it shot up in the past few days from 34 all the way up to about 38. Seeing JP Morgan rally pretty good here. Everything in the banking sector is kind of rallying, and we're seeing a lot of weakness across the board. I mean, these are not small rallies, guys. These are pretty good moves to the upside. UBS a little bit different because we do know that they're having a lot of problems. I think 30,000 people are getting laid off out of UBS starting in June. But a lot of these banks are kind of doing okay. It's like the last rally. So it's something that we have to kind of keep in mind. But yeah, everything's kind of converging at this point. So that's why I say it's a trap, a bull trap, because in hindsight, it will seem so obvious that it was a bull trap. Right now, people are maybe like, well, maybe that was just a little correction. We're going to keep pushing up. Nothing in the debt markets are saying that this is going to be sustainable. That's just what I'm seeing. Play it as it comes, but I don't have my hopes up that we're going to the upside. I think it's more realistic that there's more reward and more risk to the upside, more reward to the downside at this point. So kind of just keeping an eye on the things that no one's paying attention to. That's kind of what's going to save you, I think, at this point in the market.
All right. That is going to do it for today's show. And I believe for this week, Kevin is traveling tomorrow morning. I will have family in town. So we will be attuned to what's going on in the markets, but not doing shows. So appreciate everybody for joining us today. Randy, Mr. House, whoever else is watching. Thanks for being here with us live. If you're watching the recorded stream as well, go ahead, hit that like button for us. If you enjoyed today's show and you haven't yet, subscribe to our channel. Drop a comment, share us out on social, whatever the hell you want to do. We'll be back next week to talk about everything that is going on in the markets. Until then, stay safe out there, and we'll see you next time.
Take care, everyone.